With the Russia-Ukraine conflict entering its fourth week, we look at the potential impact on different sectors. The commercial vehicle cycle is, the space on our radar. Credit Suisse has written a very interesting note on Shriram Transport, where they have cut the growth forecast by 3 to 5%. They say that an increase in fuel costs could temper growth and profit for the company. Umesh Revankar, the Vice Chairman and MD at Shriram Transport Finance, joins us now to talk about that. Mr. Revankar, this is the overarching theme, right? Because rising fuel costs is something that could hit demand across the board, not just in commercial vehicles, but for the entire sector. Do you see that as something that could curtail your own growth? And how is the situation at the moment?
Yeah, thank you. See, as of now, when I look at the fuel price, retail price have not yet increased. So I cannot really imagine a situation. But if I go back 2 months back, when the fuel price was cut by around 8 rupees, it definitely benefited the customers very much. And at the same time, you would have observed that there are more and more rollout of CNG vehicles across the various manufacturers. That definitely means people would switch to some extent CNG in the new vehicle. And in the used vehicle, definitely, yes, if there is a price increase now on the retail, there could be some impact. But the truck operators were able to manage a situation when the fuel price was already high around 2 months back. So it is not that situation was very bad. But at this, normally what happens is the price gets passed on to the customers. The carriers or operators do not really have the impact directly. There will be lag of 1 or 2 days where they'll be hit, but it gets passed on to the end consumer. Yes, there could be increase in inflation, and because there is an increase in inflation, purchasing can come down over the period, and therefore overall economy can slow down. See, these are all situations which we cannot imagine, because we do not know how long the fuel remains at high price. So it can always come down. So it all adjustment that happens, but the carriers or the operators are not definitely they are hit, and their business may not really go out of control, and margins would remain, is what I believe.
Mr. Revankar, hi, good morning. So you're basically saying that ultimately freight rates will keep track with wherever oil prices are because of the pass-through mechanism. So this morning we've been talking about how diesel sales to bulk users has been increased. Prices have gone up 25 rupees a litre. I mean, end-use industries, could the impact come from there in terms of demand?
Yeah, see, if the economy is growing, then you need fuel. So it will get passed on in the pricing only. So it is not that demand comes down. This is something is essential goods, part of the running of the economy. So if tomorrow somebody has to travel, and if the ticket price goes up by maybe 500 rupees, people still travel. So it is not that they will stop traveling just because the price goes up. But the consumption may come down over the period, depending upon which product the price increased. So we cannot imagine a situation for that. But as of now, I feel the direct impact on the operator is not there.
Okay, so the direct impact on the operator is not there. What kind of credit costs, are you looking at? Because I was going through a Credit Suisse report where they said that they estimate a credit cost of 2.6% in FY23. I think your own guidance was 2%. So do you see an escalation of credit costs to that extent? And could it, get worse because of the situation?
No, Sonia, our credit cost estimation, we did give guidance of 2.6 because after the first wave, we had made additional provisioning. So we had made a 2.6, but we said we will get back into 2% in the next year, because once the provisioning part of it is over, the next year we'll get into 2% as a long-term average. So that's what we had said. So 2.6 is, even otherwise, is our guidance for this year.
So 23 guidance maintained at 2%, 200 basis points, right? And in AUM growth as well, I mean, guidance of 10 to 12%?
Yeah, that is something which I cannot forecast now, because depending upon how the economy is recovering, if the economy recovery slows down, then the AUM growth can slow down. So it all depends. See, post the budget, we were all very positive, bullish, because there is a higher allocation on the infrastructure and logistics sector, and we expected the demand to really increase for all the vehicles, which is in either transportation or in the infrastructure part of it. But now the situation is different. So we need to really wait and see what exactly happens. So I still feel this will be a short-term adjustment, and probably the growth rate will come back. So everything depends upon the GDP growth rate and the consumptions.
Okay, so in terms of, I mean, are you giving us any kind of, guidance on what growth may be in FY23? I take your point that it's a little hard to ascertain right now because the situation is evolving quite a bit. But by and large, what are you looking at? What could the disbursals be? What are the different kinds of trends that you're looking at within commercial vehicles itself in terms of growth?
See, as of now, we are definitely looking at a 10% growth, because we are still betting on government spend on the infrastructure. If the government spend on infrastructure as per the budget happens, definitely we would be growing at 10%. But for some reason, if government spend is less than that, then definitely the growth rate could be a little slower. But still, it will be anywhere between 8 to 12, it may average. So instead of 10, it may come down to 8, but it can grow up to 12 or more if everything is settled down very fast in next 1 month.
Mr. Revankar, could you tell us what is the cost of outstanding borrowings right now for you? Incrementally, where do you see borrowing costs for you, for the company sort of going?
So borrowing cost for us has not really increased in the last 2 quarters, and we expect the incremental borrowing cost will be still lower than the repricing cost, because we had borrowed 3 years back when we post 2018-19 that higher cost, because of capital market was not totally frozen and not available to the NBFC. At that time, we had borrowed at a high cost, and that we are replacing with a lower cost now. So next couple of quarters, we don't have any impact on the increasing borrowing cost. So our overall outstanding borrowing cost will still come down by around 10 to 15 basis points.
All right, Mr. Revankar, we leave it at that. Thanks a lot for joining us. Very helpful there. And all the best for the quarters to come. By the way, for the market, it's taking a turn for the worse. So the Nifty is now down about 50 odd points. It's nothing alarming. It's just that the market has started off a bit subdued, contrary to what the expectations were. So now it's moved to the low point of trade. The Bank Nifty is the one that's really facing the heat this morning. So down almost about 300 points. Let's slip into a short break on that note. When we come back, Prakash Gaba will give us some technical trades. We'll also get a lowdown on what's happening in the world of commodities. Stay with us.